Welcome to The Explainer. Today we're digging into a massive financial mystery, the $100 trillion secret hidden beneath Africa, and whether a company called Namm Minerals, trading under the ticker symbol NAMM, will become the next mining empire. We're looking at a microcap resource vehicle with a seriously ambitious quest, right? To build a pan-African mining platform that capitalizes on the staggering wealth of resources hidden beneath the continent. This isn't just your standard story about pulling gold from the ground. It's a wild ride of market volatility, historic corporate milestones, and a high-stakes race against time and capital. Okay, let's dive into this, because this number right here is what put Namm Minerals on absolutely everyone's radar. In early 2026, the company saw a staggering 7-day share price return of almost 237%. And here's the absolute kicker. This explosive momentum happened with zero new company announcements, no regulatory filings to justify it, literally nothing.
So when a microcap stock doubles and then basically doubles again on no news, we have to ask ourselves some pretty tough questions. Is the market mispricing Namm Minerals, or is a massive breakthrough imminent that maybe insiders are reacting to? Or are we simply looking at speculative hype driven by outside forces? That's exactly what we're going to investigate today.
Section 1. The unexplained price surge. Now, what's really interesting about this is the extreme whiplash between the short-term and the long-term reality for investors. If you look at the one-year total shareholder return, long-term holders have taken a massive hit, down over 71%. But then, out of nowhere, short-term momentum violently swings the completely opposite direction, with a 237% gain in a single week. It's practically a textbook example of wild market whiplash.
According to institutional analysts, this sudden surge wasn't triggered by some hidden gold vein discovery or a massive influx of cash. The catalyst seems to be entirely external. We're looking at extreme microcap volatility driven by broader macroeconomic factors. Specifically, geopolitical tensions pushing up the price of gold, mixed with short-term speculative interest. The market was hungry for leveraged plays on gold, and Namm just happened to be right in the crosshairs.
Section 2. Inside Namm Minerals. These guys have had a wildly fast and eventful journey to the public markets. They incorporated in the Cayman Islands in 2024. Then, by June 2025, they completed a massive $500 million SPAC merger with Hennessy Capital to list on the NASDAQ. Fast forward to March 2026, and they just executed a huge leadership shakeup, elevating their CFO Tulani Sequila to the CEO role to really spearhead their next phase of growth. And they highlight a truly historic corporate milestone here. The first Black African-founded and led mining company listed on a New York Stock Exchange. Management leans hard into this, emphasizing that they bring deep, unmatched regional relationships and local insight to the table, combined with institutional-grade governance. They believe this perfectly positions them to unlock value in totally underappreciated African mining assets.
Section 3. The three-pillar growth strategy.
So, the crucial point is that their entire future completely hinges on executing this specific three-pillar growth strategy. Pillar 1, expand their currently producing asset. Pillar 2, restart 2 historically producing but currently dormant mines. And Pillar 3, diversify away from just gold by exploring for critical battery metals. It's a very high-stakes cost of growth narrative.
Let's walk through the physical reality of these Zimbabwean gold assets. Step 1 is the How mine. This is their anchor, right? It produced roughly 25,000 ounces of gold in 2025 and actually generates real cash flow. Step 2 is the Red Wing mine. Now this one isn't producing yet. It's currently undergoing an incredibly intense 8-month dewatering process just to make it operational again. And Step 3 is Mazo, a high-grade historical producer that's currently just sitting on care and maintenance, waiting for capital to be restarted.
But here's the twist. Namm isn't stopping at gold. The third pillar is their big pivot into the Democratic Republic of Congo. They hold an interest in 13 exploration permits targeting copper and cobalt. By tapping into these green, critical minerals, they're directly aligning themselves with the global energy transition and the booming EV market. I mean, it's an incredibly lucrative sector, provided you can actually get the materials out of the ground.
Section 4. Financials and Valuation Multiples. And this brilliantly illustrates how the market is currently pricing them. The Mobby is trading at a significant discount compared to its peers. Their price-to-sales ratio hovers between 1.0x and 2.1x, well below the peer average of around 3.3x. Because the company is currently unprofitable in its core operations, the market is heavily anchoring its valuation on the Mobby's $82.6 million in top-line sales rather than its negative earnings. It's absolutely a show-me-the-execution kind of valuation. and execution requires cash. A lot of it, $300 million. Let that sink in for a second. That is the staggering estimated capital required to successfully rehabilitate, upgrade, and restart the Red Wing and Mazoe mines. That is the massive price tag on the table to actually make their multi-asset empire a reality.
Now compare that $300 million need to the reality of their year-end 2025 balance sheet. Sure, they generated a very respectable $82.6 million in revenue and $13.8 million in operating cash flow from the Namm mine. But their actual cash on hand? Just $1.9 million. There is a glaring, massive gap between their current cash generation and the hundreds of millions they need to fund those big expansion plans.
Section 5, Red Flags and Risks.
Let's move to and see how this builds into a pretty stressful reality check. At the end of 2025, Namm reported negative $37.4 million in working capital. They're operating on razor-thin cash reserves of under $2 million. And this financial strain actually triggered NASDAQ deficiency warnings in early 2026 regarding the minimum market value of their publicly held shares. Add to all of that the inherent geopolitical and operational risks of running heavy infrastructure projects in Zimbabwe, and the risk profile becomes incredibly steep.
So we have two fiercely competing narratives going on here. On one side, you've got this high-reward potential, a company with existing infrastructure, strong regional ties, and a clear blueprint to become a Pan-African producer of gold and vital battery metals. On the other side, the high-risk reality. Acute capital strain, negative working capital, and the looming threat of compliance issues and debt pressures.
Ultimately, this quote from institutional analysts hits the nail right on the head. Namm Minerals presents a high-risk, high-reward investment opportunity. Their entire future hinges on their ability to secure massive, non-dilutive financing to fund those mine restarts, while at the exact same time executing flawlessly on complex technical challenges, like dewatering massive underground shafts.
So what does this all mean? Can this microcap miner truly fund its $300 million ambitions before time runs out? Will Namm Minerals actually become the next great African mining empire? Or will the crushing weight of their balance sheet turn this whole speculative surge into a mirage? It's literally a race between operational ambition and hard financial reality. Thanks for joining me for this explainer. Keep your eyes on the data, and I'll see you next time.